It's about that time of day again. My name is Joseph. It's Wednesday evening, May 24th. Welcome back to your nightly newsletter. We're covering crude, S&P, gold, euro, and DAX tonight. Crude is bearish ahead of tomorrow's OPEC meeting, and sellers are looking for opportunities up at the high of the channel. But the plan is to really wait to see what OPEC says about midday tomorrow and trade the reaction from there. The S&P is bullish with a wedge tonight, but we're trading into 3 levels of resistance. So the plan is to wait for a pullback off these highs before buying more tomorrow. Gold is bullish and trying to complete a measured move, but we're trading at the high of a channel, so we're waiting for a 2-legged pullback on Thursday. Euro's bullish and trying to finish rotation back to yesterday's highs, but 2 levels of resistance are telling us to avoid chasing this move and wait for a pullback tomorrow. And of course, the FDAX range bound tonight. The plan is to focus on failures, sell the highs, buy the lows, and use that 2-try rule tomorrow. I got another great newsletter in store for you guys and gals tonight. We get a bunch of big opportunities setting up for tomorrow. We got some major news. We got some big ranges to work with. Got a great plan here for Thursday's session. Before we jump into our charts, though, I do want to remind you the only place to watch the full-length version of this newsletter video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link. Come join me on the blog here at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social, lower left-hand corner. Many different ways in which you can follow me on social media. I'm always posting important charts, links, and updates throughout the week on the social channels. Right below the video tonight, grab those charts. Right below tonight's video, you can find a link there that says click here to download today's charts. How easy is that? All the charts from tonight's video are available for you tomorrow. Right, follow that link below the video on the blog there tonight. And don't forget to grab your free pass. If you're not a member here at School of Trade, you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. Grab the free pass in the upper right-hand corner and come join me as a guest in the trade room. Don't forget, if you're brand new here to the SOT community, please don't forget we got a great frequently asked questions page. If you want to know the who, what, where, when, and why, make sure you use the frequently asked questions to learn more about what it means to be a client and a member here at School of Trade. Hope you guys are having a great week so far. Hump day here today. We survived the inventory report for crude oil and just in time to go head on to the OPEC announcement tomorrow morning. Tomorrow's Thursday, May the 25th. We got some minor news here. Well, pretty much your typical Thursday morning tomorrow. We have the international trade and the jobless claims at 8:30 a.m. That'll be the big news of the morning in the U.S. session tomorrow. GDP, of course, at 4:30 a.m. if you're going to be with us in London. So really the only news tomorrow is pretty much your standard Thursday morning news at 8:30 a.m. Eastern time. The big news tomorrow, of course, is we're all walking on pins and needles right now, waiting to hear what's going to happen coming out of the OPEC meeting. OPEC meeting began today. It'll be finished up tomorrow. Normally, we get news from these OPEC meetings around lunchtime, right, of course, in Europe, right? The meeting is in Vienna. And so by the time they break for lunch tomorrow, usually it's about 6 a.m., between 6 a.m. and 7 a.m. Eastern time. We usually hear those headlines start popping up and we start getting some reactions. So really, for the most part, everyone's probably waiting for OPEC tomorrow. We heard from the FOMC meeting minutes this afternoon, right? That led to gold, euro, and the S&P moving around. Crude's a little bit range bound here right now ahead of tomorrow's OPEC meeting. But bottom line is we got some great opportunities coming tomorrow after we hear from OPEC. We just don't really know what we're going to get until we hear from that tomorrow. So most important thing for us here tomorrow is, again, we get pretty much your run-of-the-mill Thursday, 8:30 a.m. news, some jobless claims. We'll, of course, be in our trade room at 8 o'clock Eastern time with all of our advanced members. But be careful on crude oil overnight. Again, we're probably not going to start seeing headlines until about middle of the day in London tomorrow. And once those headlines start hitting, that's when we'll start seeing the reaction from crude oil. It's very difficult for me to speculate what that reaction will be. Oftentimes we see initial reaction as a head fake. So again, we'll be with you guys tomorrow morning, 8 o'clock Eastern time in the trade room, and we'll figure out what the reaction looks like. We'll plan our trades, right, and then trade trade our plan together. I also want to remind you tomorrow is most likely going to be the last full day of trading of this week. We've got the holiday weekend coming up in the U.S. Next Monday is the Memorial Day holiday. Markets are technically open on Friday and Monday. You will see electronic sessions open during those times. However, the volume is expected to be extremely low. Tomorrow, being the last kind of full day, Friday the 26th is a full scheduled day, but again, the Friday ahead of the Memorial Day weekend, it'll be tough to find volume after 9:30, 10 o'clock on Friday morning. We'll talk more about that, but just be aware, tomorrow is pretty much going to be the last full day of the week of trading, so we're definitely going to want to make the best of it as we go into the holiday weekend here in the U.S. We'll talk more about that, of course, in tomorrow night's newsletter as we wrap up the week going into Friday. For now, though, let's jump in and take a look at, we got crude, S&P, gold, euro, and we'll wrap up here tonight on the DAX. Crude is bearish and trying to retest today's low, but we're coming off the low of a channel. So the plan is to look for selling opportunities up in the battle zone around the high of that channel tomorrow. One thing to remember for tomorrow is the OPEC meeting, which will most likely start seeing headlines before the beginning of the U.S. session. So careful tonight on crude until we see some headlines, and then we can have more information and trade the reaction tomorrow. As you can see here, as I'm recording this announcement right now, you can see this market blowing higher here. I think it's safe to say at this point right now, this market's starting to look pretty darn bullish. As you can see, the biggest thing that stands on this chart right now is this big, wide channel, this big wide channel. And of course, as I'm recording here, the market says, oh, bearish, well, how about we give you something more to talk about here? So obviously now we're back up to the high of that channel, and ultimately bears are now looking for a chance here now, to sell back down off that high, and retest that low. Now, it's tough to say this market is bearish, when we have such a tremendous, strong green candle here right now. So with more information, now let's wait, for more proof. And that proof would come from getting back below the moving average, and then holding that pullback for the move coming back down. So again, looking bearish, looking bearish as of just a few moments ago, but now with this big monstrous green candle, we know one of two things. First of all, if the bears want to take this lower, they're going to have to get back below that moving average and really give us, some proof that they want to take this lower by holding that pullback. Beautiful spot to be a seller, but really difficult to justify selling into that big of a green candle. Now, buyers aren't out of the woods yet either. The buyers now need to hold this pullback, which at this point looks to be assumed, and if they can hold that pullback, now we're in the ballpark now to start watching this, as a big bull channel, and then getting that pullback to buy low tomorrow. The buyers are hunting for a retest of that high at 51.88. The sellers are hunting for a retest of that low at 51.03. Again, it's really your guess is as good as mine as far as what OPEC's going to say. We've already heard earlier on this month about a 9-month production cut. We hope to hear more about that tomorrow. And again, as you can see, big, strong move higher here. Wait for more proof on both sides of the market right now. It's bearish, but again, this big green candle makes it very difficult of a pill to swallow right now. For the bears, get back above that moving average, back below the moving average, hold that pullback, and then we'll start looking for those sells coming back down, If it wasn't for this big green candle, I'd be saying buyer failure. I'd be saying buyer failure. The problem is that, again, that big green candle is going to do a lot for the confidence level for those bulls. Again, it's a pretty wide channel, so it's not totally surprising to see this market rotate back up to the high of that channel, What is a little bit surprising, though, is to see the first candle of this overnight session, be the biggest candle of the day. It's even bigger than the candles we got from the inventory report this morning. So bottom line is, bulls, you guys still have some work to do. The bulls still need to hold a pullback. Bulls still need to hold a pullback. Assuming they do, then we start looking for buying opportunities, pullbacks, traps, two-legged pullbacks for move back up to retest the high. So a little bit of a waiting game here right now. Buyers have to hold the pullback to really solidify this game to the upside. And again, the sellers, I really at this point now, I want to see these bears come back down. Show me you mean it. right, by holding that pullback below moving average, and then we'll be off to the races to sell this market back down. Very difficult ahead of the news tomorrow. We'll wait and see what we get. Don't forget, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time, and we're looking for more information to see what the reaction looks like at that point. Over onto the S&P here. The S&P's bullish and trading at the high of a bull channel, which may develop into a wedge tomorrow, but the measured move is just a few points away, telling us to avoid buying this high and look for more reliable buying opportunities back at support levels below. The first thing that stands out in this chart is that trading range to start the day today, and this being the second time the buyers have tried to push higher, this tells us to stay patient for a deep correction off the high in the battle zone tomorrow. As you can see here right now, market reacting to the FOMC meeting minutes that were posted at 2 p.m. Eastern time. The day starts off very much inside of a range, but you can tell this breakout here coming off of that 2 Eastern time FOMC meeting minutes we talked about in last night's newsletter sends price up. They held the pullback, and of course we're hunting for that prior week high, right, and that measured move. Now, it's easy to see this trading range. We now have 1 try, 2 tries. This is the 2 try rule. The only problem with this is this is all coming out of news. And news is one of those specific situations, natural disasters, political announcements, economic news, right, that will definitely be effective enough to break a market out of a trading range. Most breakouts fail, but again, with natural disasters, political announcements, right, economic news, these are some of the scenarios that can effectively break stuff right out of these ranges. Strong move up, buyers follow it by holding that pullback. I'm going to give the edge right now to those bulls. The problem though is a lot of buyers are going to be intimidated buying up around this resistance, buying up around the high of this wedge. And so really the most reliable trade right now will be to get this price to pull back so we can buy low. Now, pulling back to buy low, there are a few different ways in which this might happen. We definitely are watching these levels of support, right? The 2400 battle zone, of course, a big round number, right? Of course, that prior swing. So all of these areas below, this could be as simple as a trap low. This could be as simple as a failure, seller failure, right? Or it could be a little more dramatic. I would imagine it'll be a little more dramatic because the day began inside of a range. What I mean by that is it may pull back a lot lower here now into that battle zone, back to that range high, back into that, right into that big round number, and then give us that two-legged pullback, right? Two-legged pullbacks usually involve, right, some sort of trend line coming down off the high and then getting above that trend line and using it, right, as an area of support. The hard part right now is we have this overhead resistance. So if it pulls back, it's pretty easy. Trap low, right, failure, two-legged pullback, right? These are all very simple ways in which we can buy low. If the market keeps pushing higher, though, now we have to think we're now trading inside of this wedge. And remember, wedges are great, but the narrower they get, the more difficult they can be. So if we do keep going higher here, just make sure you focus on avoiding buying into the high of that wedge. And just really, whenever the wedge gets really narrow like this, you want to start thinking about traps, right? So find those prior swings and then look for traps, right? Back below those prior swings. When the wedge gets nice and narrow, just don't buy into the high of that wedge. And as it gets narrower, it becomes more difficult to avoid buying into the high of that wedge. So really wait for that trap low, wait for that deep pullback, and buy that next deep pullback, right, for, again, that target going up to the point of that wedge. We talk about wedges quite a bit on this nightly newsletter, right? So the point of that wedge is where that target will be for tomorrow. But again, as it goes higher, don't chase after the move higher. Wait to buy the pullback. Wait to buy it off the high. Two-legged correction, trap low, seller failure, right? Just get back below the moving average, basically, and buy low. That way you're not buying high. So on the S&P, buy the dip, right? Buy that dip, or of course up, and then don't take the bait, right? Two-legged pullback, trap, right? Trap low, right? And buy from there. So we're not buying high tomorrow. Pretty easy chart there on the S&P. We'll see what tomorrow brings. And I'll be interested to see if the S&P reacts as much as I think it might around the OPEC meeting tomorrow. You know, I know it's crude based, but everyone's watching the price of oil these days. Let's keep moving. Gold is bullish and trying to reach the measured move, but the high of this channel appears to be standing in our way. And this recent move is very strong, which tells us that we need to avoid buying into the high, but we won't likely need to wait for a rotation all the way back down to the low of that channel tomorrow. The plan is to look for a trap or a two-legged pullback off the high for the most reliable buying opportunities, going back to retest the high and possibly yesterday's high as well. Guys and gals, don't forget, if you want to learn more about what it means to be a student here at School of Trade, if you want to learn more about these trading strategies we talk about every evening on our nightly newsletter, don't forget to join our free trial. We have a great free trial on the homepage here at schooloftrade.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link. Come join me on the website at schooloftrade.com, right? Join the free trial, learn more about our 3 levels of membership, and don't forget, I'm always here standing by if you have any questions along the way. Great job tonight. Thanks for sticking around with me. Great job this week. I'll see you guys same time, same place tomorrow, 8 o'clock Eastern time in the trade room. If not, we'll wrap up this week tomorrow night on our nightly newsletter before 8 p.m. Eastern time. Adios, amigos. Bye for now.